EA just burned 2.5 billion, but not for you. Well, yeah, the day EA does something for their consumers is gonna be the day hell walks over the earth.
If you want to know why things happen in the industry, this is one of those videos where you'll definitely learn. So, who does EA make games for? I mean, we know that they're all in live service to the point of barely really releasing like one single player game a year. We know they're endlessly monetizing their sports games with
Wait, what kind of sports game card is this? Is this a vomit? It's a vomit. What the hell is this? I'm, I think I don't understand something here.
monetizing their sports games within the de facto
Wait,
monopoly
no,
they've held in that
wait.
within the
Also,
we know that
why does James look like a woman? What? Man, what happened to football?
they're endlessly monetizing their sports games within the de facto monopoly they've held in that genre for years. We know that they, of course, grind developers to dust inside the likes of Respawn to make sure that returns don't get outpaced by that pesky spending. But as we look at the fact that they've made a profit of $1.1 billion last year, how does it make sense that they also spent $2.5 billion on something completely unrelated to games? It won't be talked about much, it won't be cited as, oh, a big reason why our games aren't as good anymore, or anything like that, but it
Bribes? Hopefully bribes?
is important because yes, they dropped $2.5 billion on something that's important to them, that's entirely about their reason for existing, but it isn't good for the developers and certainly isn't good for you. So last time we covered the EA cuts, they were 300 to 400 people, with 100 coming from Respawn. And according to EA, they, quote, acted decisively, realigning resources, managing costs, and focusing on our biggest opportunities. Hell yeah, stonks. But of course, since those cuts, we can now take, well, a pretty darn good stab at why those happened specifically at Respawn. And that's really just one side to their recent earnings report. So, EA are
Bro, I can't. I can't. I don't want to look at this Apex non-binary clown fiesta, okay? It hurts my eyes.
projecting that between this year and last, Apex Legends is expected to generate 40% less revenue. That's a massive decline. The game is already, of course, on a downward trend, and considering that the team had walked back the
So 40% year over year less it's expected for 2026 over fiscal year 2026. Okay, that makes sense because no one's certain what. Okay. So this is what I would instantaneously call deceptive practices, at least deceptive financial practices. You see, because currently everyone's afraid because no one knows what's going to happen. Is there going to be ban on this? There going to be tariffs on that? Not that that matters for any of this crap, to be honest. But I mean, this is your opportunity to actually say, well, we're expecting a little bit less because people are going to have less money to spend, blah, blah, blah. Because if we look at this 40%, let me just real quick Google Apex Legends Steam DB. Let's look at the Steam DB. Okay, whoa, 227 people currently playing. That's a lot, honestly. Let me share the screen real quick. There we go. And let's look at 1 year. So, a high of 330, and now that's roughly a third. Yeah, that's actually roughly a third. See, this is effectively exactly a 1/3 drop. If you look at this, it's actually it's pretty close to 40%. But the reality is, this player drop will never correlate to the amount of money you actually lose from something happening in the game. You know why? Because the most dedicated players who have spent the most money on this game are still playing, probably. Their drop off is significantly less than the average drop off of the player base, at least typically. So this will not act. So a 1/3 drop in players, or maybe almost a 40% drop in players here. It's pretty close. Yeah, it is definitely pretty But actually, this small bit here is exactly 40%. But again, even though this looks kind of close, not gonna lie, the reality of the wait 1 year. Did I press 6 months? What did I press? Whatever. Um, all of these drops don't matter, okay? Because the people who are making the most money for this game are not 40% of them is not gonna leave. So this 40% is just EA taking the opportunity to actually say, yeah, we expect a bigger drop off. Because this serves two purposes. One, if an actual drop off happens because EA is a failing company, effectively, then they have already created a buffer zone for themselves, even though this is not their real expectancy. But the other big thing that happens with this is if they do not drop by those 40%, if they drop like 25% only, they can be like, look at us, look at us. Everyone gets a promotion. That's right. Especially the CEO, who obviously did all of the hard work. Bam! Perfection at its finest.
The monetization changes, yeah, that does make sense. That decline in expectations, that is. They simply don't have a way to get players to spend as much money. Now, at the last earnings call, EA confirmed that they would be working on a, quote, more meaningful update of Apex as a broad game experience. So, some sort of
What do you mean more meaningful? Adding genders to the characters that happen?
major thing is brewing, but to give it a chance, they probably need to wait till, say, after the next Battlefield launches. But Apex is only one part of the story today, though at least EA are being realistic about, well, their expectations. And it turns out that them being realistic about those expectations has allowed them to just barely scrape by. And in case you're out of the loop, sports had seen forecasts drop amid wider struggles, and those drops were far more in terms of like revenue that they didn't expect to make than Apex alone. And of course, when the cuts happened, we knew that those cuts was basically them shaping their investor narrative, because they announced the cuts like a week before their earnings call. But of course now, that earnings call has happened, and I think it very much confirms what we expected. EA actually pulled it off. They turned their story around, but that's really in large part because they had already slashed their revenue forecasts. So, quarterly revenue, income, and bookings were all up, but year on year, the net bookings were down 1% to 7.3 billion. The revenue was down 1.3% to 7.4 billion, and the net income was down 8% to 1.1 billion. I'm sure the net income being down is the bit that will hurt the most. Now, put simply, right? EA
Well, yes.
scraped by, but it could have been quite a bit worse. As an example, Split Fiction performed nearly twice as well as they had expected. It hit 4 million sales. That contributed actually to the majority of their full game sales for the most recent quarter. Over in the land of The Sims, the re-releases of 1 and 2 did fairly well. They had some really well-selling DLC, so that
Sims 1? Holy bis.
bumped Sims net bookings up 30%, the highest ever, and somehow Dragon Age even got a compliment for contributing to full game sales. But where it's interesting is across the whole year, because full game sales hit $2 billion, that's up 1%. But as an example, if Split Fiction sold at expectation, say 2 million copies instead of 4, you would have been looking at a decline for the year. And speaking of declines, live services. Because across the full year, right, full games made them 2 billion, but live services made them 5.34 billion. With numbers like that, I think we all know that their priority will be live services. And like 4 million sales of Split Fiction.
We already know that everyone's priority is live services. And why? Well, because exactly that. Because it's 2 times 5%, 2 times 5 more profitable.
Is cool, I guess, but that's only 200 million bucks. Live services were down by 2%. That's 106 million. So that tiny drop in live service basically cancels out Split Fiction, almost doubling its sales expectations. That just kind of shows you what's up here. Now, live services is overall 73% of their total net bookings. And that means, like, whenever we said that Dragon Age is underperforming...
You know what's my pet peeve about all of this? Net bookings. That term literally is so ass.
...was essentially irrelevant compared to sports declining. That's what we meant. Moving to the sports revenues, though, things are actually kind of interesting. Global football took $1 billion this quarter alone. It's a shitload of money. And to their credit, EA actually did say that this was driven entirely by the development teams in EA Sports FC, basically rebuilding the game to meet player expectations and feedback in January. What a shock!
The first time that EA improves a football game ever. What a time to be a time.
Shocking thing, if only that happened for Apex, eh? But what that did is it brought the spending back to double digits, right? And what had really been worrying, existentially so, is that spending growth had been declining. It hit the single digits. So with that being back to double, they will be happy. And the thing to take away from all of this, right, big picture, is that EA still just about missed what they made last year, even if it was within their financial projections that they had decreased. Now, they were never at risk of making a loss, but the line has to go up regardless. And despite literally breaking records in multiple business areas, well, EA are predicting they will make lots more next year. In fact, another $500 million in bookings. Yeah, they're saying the line's got to go up. And yet investors in the share price are still broadly at their average for
3 to 8%. Doesn't that pretty much account just for inflation at this point? So, yeah, I mean, they're fine.
last year. And that's not because they think that Skate, Battlefield, and I don't know, EA Sports phone apps will bring in cash. It's because EA actually just
Bro, those phone apps are gonna bring in cash, okay?
proved that their business models worked. It's just not in the way that you, the customer, would be thinking. Not at all. EA's chief financial officer started his statement on the call with the following summary, and because it's delightful, I'll quote it for you. Combined with sustained strength in American football beyond the end of the season and the breakout success of Split Fiction, we expanded margins, generating strong free cash flow, and returned over $1 billion to stockholders through our enhanced repurchase program and dividends. Now, in that statement, there's
Enhanced repurchase program? What? It's just it's just repurchasing. What do you mean? Okay, EA at least is doing things smartly, to be honest.
enhanced repurchase program and dividends. Now, in that statement, there's one bit that's the most important, and it's key to understanding how AAA game developers that are publicly traded, like Electronic Arts, think and work. It's literally their purpose. It's nothing to do with
By the way, this is such bullshit also. When they are saying return over 1 billion to stockholders through repurchasing, that just means they bought their own stock. Their stock went up in value because buy, and they made money because now they have liquidity in the form of they can sell their own stock if they need money for something, and the shareholders' stock went up. That's what this means. They did nothing, but value was created. It's kind of like a pivotal thing in modern day finances, by the way. Do nothing, value increases. And that's a big thing about stock buybacks.
repurchase program and dividends. Now, in that statement, there's one bit that's the most important, and it's key to understanding how AAA game developers that are publicly traded, like Electronic Arts, think and work. It's literally their purpose. It's nothing to do with games, but it's everything to do with AAA game development. This will be a little bit dense, but trust me, it's the point of this video, and it's literally why you often feel like games are not properly reinvested into. In financial year 24 to 25, EA spent $2.5 billion
Does anyone feel that?
on buying back less than 1% of the shares that they had previously issued to the market. Now, $1.3 billion of that was spent in just the last 3 months. And what I'm going to do is explain kind of why all of this works in a simple enough way. So, at the end of every quarter, Electronic Arts pays every shareholder a 19-cent dividend per share, and they've done this for the last 3 years. Now, to keep it simple, these are equally divided from a portion of EA's profit for the quarter, and they represent something important, and that thing is consistent and guaranteed value for money for investors. Even more so when
Wait. What did he just say?
divided from a portion of EA's profit for the quarter, and they represent something. Now, to keep it simple, these are equally divided from a portion of EA's profit for the quarter, and they represent something.
What do you mean equally divided from the profits for the quarter? The the shareholders either get paid or they don't get paid. No one gets paid more, no one gets paid less.
Important, and that thing is consistent and guaranteed value for money for investors. Even more so, an EA will pay to take them from you on occasion. So EA are spending billions of dollars each year on this, on these stock buybacks, buying them back from the public markets so EA own, well, more of their own stock. And they do that rather than spending money on development or developer compensation because that's not really what
But that plays into all of this. The reason companies go public is to create shares that can be sold to other people in order to get actual liquid assets. That's how they're doing this. EA is, yes, primarily they're doing this to enrich themselves and the shareholders and the CEO. That's the most important part here, honestly. But this does allow them to actually have cash flow, if necessary, for new projects. Now, granted, why the hell would EA ever do anything new and not sell you the 57th iteration of the same sports ball game that you were already buying and playing? I don't know. But, they have the option at least now.
what the company's for. What the company's for is, of course, shareholder returns. Now, these stocks are traded on the market, and yes, there's the dividend side, but also by buying their shares back, EA decreases the supply. And this can help them maintain their price or push their stock price higher. And that does matter a lot for investors.
Oh, he's gonna say now what I said 5 minutes ago.
Investors. You see, EA's what they call dividend yield is fairly small. It's 0.51% annualized. That is, of course, much lower than inflation. That's an awful way to earn money. And this means that the best way for EA to serve their shareholders
Oh, dividends are not evaluated or have a lot to do with anything of that. What he said just now, that's kind of random, but okay.
is to push the price up because that will increase the value of the assets that their shareholders hold. Those assets being the shares. Now, year on year, Electronic Arts are up
he's saying
17%.
exactly what I said.
And we can contrast this with other companies. As an example, Ubisoft. The last year of Ubisoft reporting has, in many ways, been about
Go and die, Ubisoft. No one loves you.
shareholders feeling cheated. That's why there's legal action. Investors feel that their investments aren't really worth it. They want better returns. They think the board's not making decisions in their best interest. And some, such as AJ Investments, they see.
Well, yeah, we talked about Ubisoft a lot. The board is not making decisions in the interests of the shareholders. Okay, that's the whole point of the Tencent deal. It's about Tencent and the Guillermo family getting richer.
A week embattled Ubisoft, and they maybe think they can swoop in, do some, shenanigans to jack up the price. Anyway, EA's investors, on the other hand, have consistently gotten the same thing, regardless of dips or problems. And literally, the purpose of this listed company is to generate money for its shareholders. And of course, to generate that money, they'll
Well, theoretically, that's the job of every company on the stock market. Yeah, that's kind of how it works, and that's a big problem in the games industry.
rake in profits. Those profits can then be distributed via dividend, but also they can show growth. And if there's a very high expectation of growth, then the market.
Keep in mind, dividends can at any point be taken by any company that gives out dividends, and they can be held, aka not paid out without any recomprehension, if these dividends are used to further grow the company. Yes, a company paying dividends can literally at any point say, yeah, we're not going to pay out dividends because we want to use this money and reinvest into the company. There you go.
Will see that shares in the company are worth more money, so people will buy more of them at a higher price. So the line will go up, as we often say. Now, this doesn't mean that the games EA makes are unimportant. They're not wholly unimportant. They are important. No good games, of course, means there's no profit to distribute. It means there's no expectation of growth to make the price go higher. But there's another part of this earnings call that shows the outcome is far more important than how these games are produced or why they are produced.
Yes.
And rather ironically, It comes from EA confirming that they have no plans to increase the price of their games. That may sound insane, I know, but don't worry, I'll explain. So, one of the analysts on the call asked about the macro state of EA's business and how they plan to respond to competitors raising prices on AAA games. I mean, of course they asked that, they're investment analysts. CEO Andrew Wilson pulled an Andrew Wilson. He fluffily said absolutely nothing of substance. But then the CFO chimed in with about 10 words and said that they had no plans to raise prices as part of their next year guidance. Who knows?
Oh, is EA actually gonna win? Oh, no, dude! I think this was 2 years ago. I need to look in who the hell the CFO is of EA. Because I think this happened like 2 years ago that I said, wait a minute. Whoever is in charge of the finances for EA kind of seems pretty fucking smart. he's doing things that make sense, which most of these companies don't do nowadays. I really need to look into. Maybe he's like some kind of fucking hidden crackpot genius or something.
Maybe the next Mass Effect will be 80 or 90 bucks. But this actually shouldn't be surprising. What games would EA actually charge $80 for? And I'm not saying that to just, jab at them. There's a deeper point here. Because going back to our Ubisoft comparison, this earnings call also highlights a huge difference between the two companies, and that difference is back catalog. Ubisoft consistently makes heaps of money from their back catalog. That's just people buying old Assassin's Creed games, which of course very often are updated to be 60 FPS and all that stuff in the modern consoles. EA don't really have that. In fact, their own catalog income was explicitly called out as being weak, and they said they expected it to be weak in the future. And you won't like the reason why. It's because EA are moving towards...
What? This is one of the things I don't actually know about the game industry. It's like, why the hell is a catalog called weak? Because they don't make new games? That doesn't... Like, listen, Activision Blizzard has not made a single new game in literally decades, and they're all the better for it. No one's calling their catalog weak. So, what is the point of calling EA's catalog weak? I'm kind of slightly confused here.
And I'll quote them, a more focused slate anchored around massive online communities and select blockbuster storytelling investments. God, I love a blockbuster storytelling investment.
Same.
But, I mean, it is pretty obvious, right? Why would anyone buy a sports game from 2 years ago? And when EA are only producing 1 or 2 other games per year, that doesn't really leave much else to be sold as a premium product. And as the difference between full game revenue and live...
Why would you ever want to sell a premium product, though?
...service revenue shows, well, live service is simply far more important to them. They are actually...
Yes, we knew this.
Actually making single-player games. They are making non-live service games. EA Originals is custom built to make sure that there's one every year. And they've clearly got, by now, a good enough relationship with Disney to lock down multiple Marvel and Star Wars projects. But that sort of thing is a luxury, not a necessity. They are select because they're risky in a way that consistently monetizing their live services is not. Because you can just make a new football every year and tweak how you do it, right?
True. Well, anyway, that was Bellier Gaming News. Which channel is this? News. 10 out of 10.